The stock market. Now, if you're a human being or just any living organism, to be honest, you've probably heard about the stock market at some point in your life. But the thing is, whether you are a brand new beginner or you're a seasoned investor, but you've been keeping amateur status in case the Invest Olympics comes around someday, the stock market can be a bit confusing. So in today's video, I'm going to be breaking down the stock market, more specifically what it is, how it works, and how we can all use it to get rich. So what is it? The stock market is simply a collection of global exchanges and markets where shares of public companies such as Apple, Amazon, and Google can be bought and sold. But before I break it down any further, I feel like there's a few essential things that we need to know when it comes to understanding the stock market. Number one is stocks. A stock is a small part of a company. Units of stock are known as shares, and owning shares means that you own a small piece of the company and are entitled to the share of the profits and assets according to how many shares that you own. Number two is markets versus exchange. Now, you've probably heard of some of the big exchanges like the London Stock Exchange and the New York Stock Exchange. And these are bodies within the global market that are there to facilitate trading. Now, the stock market and stock exchange are often confused as the same thing, but they are in fact different. An easy way to think about it is the stock market is the place where all types of stocks trading happens, and the stock exchange is like the middleman that makes those trades easier. The next thing that we need to know is index. An index shows how investors believe an economy is performing. It gathers a range of data from different firms and comes up with conclusions based on that compiled data, which helps investors compare current and previous prices to see how the market is performing. Now, indexes come in different sizes and the amount of stock that they track, and each serves a specific purpose, with the major indices being the S&P 500, the FTSE 100, and the Nasdaq. And the last thing we need to know is the UK stock market. Now, the UK stock market is made up of two parts. The first part is the London Stock Exchange, which is one of the oldest exchanges in the world. The other part of it is the indices, such as the FTSE 100 and the FTSE 100 and the FTSE 250. The stock market works kind of like an auction house where buyers and sellers agree on prices and then make trades. This works in two ways. The first one is the primary market. This is the place where companies put up newly issued stocks, which is known as the initial public offering, or IPO. The second way is the secondary market. This is the area that investors buy and sell their stocks to other investors, and what most people think about when they talk about the stock market. So how are prices determined on the stock market? Stock prices are usually determined by supply and demand, meaning that if there's high demand for a stock, prices will rise as investors buy more shares. But the reverse is also true. If a lot of investors want to sell their shares at the same time, the stock price will drop. So now the best part, how can we invest in the stock market? A great way to start investing in the stock market is to add some money into an online investment account like an ISA, robo-advisor, or a brokerage account that you can then use to invest. Now, most investors will do great focusing on two types of investments. The first type is funds such as mutual funds or ETFs. This is a great way to diversify your portfolio because it allows you to buy small pieces of different stocks in one purchase. Having a diverse portfolio allows you to lower the risk that comes with investing. The second type of investment is individual stocks. You can buy a share or more of a single company, which is a great way to start getting the hang of stock trading. But never put all your investments into one company because that makes you completely dependent on that company's performance. So that's the stock market. Well, the essentials at least. I mean, you can go into more in depth and figure out every little minute thing, but honestly, 99% of people would do amazingly if they just invested in funds or individual stocks. I mean, you can go more in depth into this and focus on every little minute little thing, but honestly, 99% of people would do great if they just put some money every month into an ETF and let the stock market basically do its thing. So that's it from me today. Hopefully you enjoyed this explanation about the stock market. Thank you for watching, and I'll see you next time.